All right, perfect. So at this stage, it looks like we are good to go. I'll just spend the majority of my time in the actual market versus heavy on the slides, so I don't really have a ton of slides for everybody. I will just give my introduction in case you don't know who I am. So in a room like this, I'd probably anticipate about a 50-50 split. So half of you have seen me before, the other half have not. Some of you have seen me, in my various career over the last, 13, almost 14 years now. And I really have a strong passion for, number one, helping people. In today's age, it may sound cheesy, but that's a real passion of mine, having people have that aha moment. And the vehicle I like to leverage to fulfill my passion is the financial markets. So I really appreciate and understand what it's like to be in your shoes. I was a chief revenue officer for years in one of the largest financial education and training technology companies. You may think, well, if you're focused on the revenue side, what do you know about trading? Well, for us, we are required to understand the markets because we had to provide not only just great products and services, but more so we had to understand the client life cycle in what were the biggest barriers of our clients achieving success or not. So I've spent well over a decade learning the technical aspect of trading, surrounding myself with many of the top traders in the business that I still have very strong relationships with even today. What you're going to see today is very simple. It's leveraging time-tested tactics of the market, which is momentum and direction. Setting up trades, though it may sound difficult, is really the easier part. Where to get in, how to get out, how to manage your stop losses effectively. That to me, in my opinion, is the most straightforward piece of the puzzle, of the trading puzzle. The most important thing is knowing what to trade, when to trade it, and how to trade it. Okay, so that's what we're going to focus on today. And I'm going to be providing a fully transparent, open presentation. You're going to see all the different settings we use for different indicators, different strategies and philosophies. Some of you may be able to take what I teach today and actually go out and apply it. But for those that enjoy what you see today and you really want to take your trading to another dimension, then you can participate in a class that I'm going to give you an opportunity to join us on that starts next week on October 4th. So, but this is not one of those show and tells where you can only use what I teach you by making a purchase today. In fact, some of you may go out and re-engineer this and try to do it yourself, which is fine. But for those that just want to skip all the School of Hard Knocks and jump right in and follow the strategy today, you can do so and join our clients here next week if you want. But I just want to put that out there. You're going to really see the full implementation of the strategy, one of the strategies. Now, I'm not going to go through all of them, but in my opinion, one of the most straightforward and easier strategies to digest. Okay, that's what we're going to focus on. So with that, like I promised, I don't have a lot of chart work, a lot of slide work here. What we're going to be doing is jumping into the market right away. So lots of time on charts. Now, I'll walk you through the setup and what's on here. But initially, what I like to do is I just want to get a running list of stocks that you all are following. Okay, so on the right-hand side here, and for those that are curious, this is TradingView. This is the platform that I tend to use. You don't have to have a paid account here. Okay, so they have a free version that's open and available to anybody that wants to sign up for an account, basic first name, last name, email address, and you can get a free account. So you don't have to pay for it. In fact, to use the strategies that I teach, you don't have to have a paid membership. I do because I do some, other advanced things with it. But for months and months and months, I was teaching this strategy on the free version. So it works. So on the right-hand side here is a list. Okay, it's a watch list. So it's just today's webinar. So what I want to do now is I just want to get a list of stocks that you all are trading. Maybe you're researching them, or maybe you're in an active position. And we're going to use that for the class material today. Okay, for the actual webinar content. Nothing's pre-canned. I didn't go through and pull up a bunch of stocks that we're trading and making money with and show you how it works. I'd love to just get a list of random stocks that are important to you all, not necessarily important to me and our clients that are already with us, but just type in the question section. Give me the symbols, the full symbols. I don't need the name, just the symbols only. Type it in the question section, and I'm going to put them here, and we're going to use that today. So that way it's a little bit more specific to you and not just, like I said, relying upon, my pre-canned or pre-set up event. Oh, nice. Good to see you. Yeah, I'm no longer with them, but I still wish them the best. Yeah. So we got Ford. Oh, we got quite a few from David. Let's see here. Let me get the list flying a little faster here. So we got Shopify, AMD. We got Lulu, UMH. What else do we have on the list today? We got LCID, Eric, ET. We got Sunco. Or is that Sunsweet? It's probably Sunoco, right? Yeah, that's the right one. All right. And then what else do we got? We have SWN. Lots of participation today. I love it. Lots of symbols coming in. Qualcomm, Baba, however you want to pronounce it. Holy smokes. I love it. Yep, the SPY, Amazon. I already have the SPY. We have Amazon, Affirm, Netflix. Oh, you got one of the Reddit stocks here. The Wall Street Bets darling here, Nokia. All right, I think that's a good list. Oh, we got Tesla. Okay, I like Tesla. We'll put on some Tesla. All right, then they're still coming in. All right, so we're gonna have to call it over. All right, so and then we got Moderna. All right, so big old list. Let's see where everyone's trading at. All right, so all I did was I clicked on, I'm just curious to see where everyone's investing. All right, so if you didn't know, here on these watch lists, which is pretty cool, you know, I've got the big 4 indexes that I always track, you know, the NASDAQ, the SPY, the Russell 2K, and the diamonds, the DIA. And then all the rest of these are all your stocks. So when I click on that little pie graph, it pulls up a breakdown. I don't know how I can do this. There we go. I'm trying to get my camera out of the way. You know, if you've never hosted a webinar before, it becomes quite obnoxious to see your face talk all the time. It's like looking at a mirror all day long. All right, so 20% of you all are in technology services. So this is our portfolio, okay? So 20% of the portfolio today is in consumer durables. We've got electronic technology. We have technology services. We got retail trade, energy minerals, health tech. Yeah, so 60% of the stocks are in 3 of the sectors out there. So it's just interesting to see where everybody's at in their trading in this room. I'll talk a little bit about this if we have time, about that mix and that breakdown. All right, but that would be if we have extra time. All right, so let's talk about the markets. All right, so in essence, you know, I got this question yesterday in an interview is, you know, what's the Momentum Breakout Trader all about? It's about simplifying the market and focusing our attention to the 2 most important aspects of what makes price move. So price moves based upon one thing and one thing only, and that's trading activity. You can remove all of the noise in the market, all of the talking heads, all of the opinions that float around the marketplace, and whittle it all down to the transactions drive the market. And most of the time, you'll get a sense of what's the next up and coming big move or sector based upon following where the money is. So I know there's courses out there and there's books on follow the money, which I agree with and I enjoy. So, but how do we break it down so you and I, the retail trader, can quickly and easily understand what's happening? Not only what's happening, but where is the action at? And so the Momentum Breakout Trader's philosophy is about that. It's number 1, identifying where the momentum is. And then number 2, what direction is that momentum trading in? And then from there, setting up a trade and actually jumping in the market and timing it properly. That's the easy part. The majority of our time should be spent on identifying what to trade, when to trade it, and then how to trade it. That's the quintessential focus that we all need to be adhering to, right? That level of focus. So when we come up with any chart, you know, this is the NASDAQ. We can be looking at any one of these, which we will. We'll go through all of these very quickly. You'll be amazed at how fast we can bang out a big list like this as far as analysis is concerned. So for me, what you're going to see me use a lot is larger time frame trading. Now, you can deploy this strategy on not only stock trading, obviously ETFs, but you can use this on your futures trading, Forex trading, as well as even crypto trading. Okay, so the philosophy of the momentum is found across all major financial markets. It's not a stock only, strategy by any means. It's about understanding where that momentum is and then trading it appropriately. So we're just going to be talking about stocks today and even exchange traded funds like this one here, because most people are aware of what they are, how they move, and we can skip a lot of the basic stuff. So the key to any successful trading is understanding what's happening on the chart at any time. Okay. What I appreciate about understanding the flow of the market is expectations. So when we pull up a chart, and we're going to be sticking, you'll see me use daily timeframes because I like to trade when the market's closed. All right. Once the day is settled, you imagine all of the transactions are settled. We can then take a quick snapshot look at what took place. All right. And that's the core focus here. So here's the Nasdaq. Here's today, big old red bar. Now, obviously that's bearish. Okay. Green or bullish, red or bearish. If you don't know what that level yet, this may be a little bit over your head then. I mean, you're super, super new. But everybody in this room should have an understanding that green bars are bullish, meaning that day the market closed higher than it opened. It went up that day. Red means it went down that day. Okay. But a trend isn't made in a day. It's a collection of historical price moves that give us a trend, a direction. So many people think the market may move erratically or without any clear discernible patterns, but it's just not the case. All right. So we're going to break down simple patterns. Now, I'm not going to go and draw trend lines all over the board here. It takes too much time. It is science driven, but it's also dependent upon a lot of art form, and it's hard to replicate good art, right? I appreciate some of the Picasso paintings that are out there, but I don't like all of them. And if I wanted to be Picasso, I couldn't just pick up a paintbrush and become the next Picasso, right? I mean, it's hard to replicate, the perfect, form of art, right? Could be music, could be drawing, whatever level of art that we're discussing. It's not a matter of just replicating somebody else, right? It takes some natural abilities. And that's what I think about drawing trend lines and doing manual analysis. So some of the cheat codes, right, that I like to use is I like to use very simple mathematically driven indicators to help really take a lot of the burden away from being right. Okay. So what I'm going to do is I'm going to layer on several simple indicators. I'm not going to use anything advanced. We're going to use, and starting off with just a simple moving average. Okay. I'm not going to use an exponential. I'm not going to use a weighted. Those are all fine and dandy. But for this content today, I'm going to keep this super simple. So once I add in the indicator here, I'm going to start with a very high level look. Okay. So I'm going to start what's known as with a 50 length moving average. Now the length is how many days or how much data we're going to be using to give us a mathematical equation. The mathematical equation that's found here is an average of the close price of this symbol. Okay. So there's so much literature out there about moving averages. I mean, it's a time-tested technique. It's often used and commonly used to a first-time trader, never traded, all the way to some of the most experienced traders in the world. Your big, hedge fund traders, your money managers that actually manage hundreds of millions, if not billions of dollars in the markets, all leverage some of these indicators. Okay. So it's not, anything that's untested and that's not tried and true. Okay. So what is this data giving us? Well, it's a simple mathematical calculation. So right now, if I come to today, you can see this number change right next to the indicator here where my cursor is. I don't know where I'm at on your screen, my video, but for me, it's on the left of my chart. Okay. It's left of me on my screen. So this line is generated and it goes back. It's a rolling 50 days because I've got days selected here. Okay. So it gives us a 50-day snapshot look. So if you think about how many trading days there are, let's say an average of 20 trading days a month, we're looking at about 2.5 months worth of price and then generating an average price in that time frame. You're going to see me use a multitude of different numbers here, and they all are relevant. Okay, but I'm going to start here just for the explanation. So what this is doing is providing us a trend line, the 50-day average price, and it's generating a line. I selected a line, but that's what it's given us. The way you leverage this is very simple. When the bars or the candles are above this 50 moving average, that's a bullish trend against the 50-day average. Okay, so all the way here from when we first crossed over, which is May 20th, all the way till we hit Monday last week, September 20th, we are above the 50-day moving average. So as soon as we cross below it, it turns from support holding up the market. I'm not raising the roof. I'm just supporting, right? Like the roof. It turns, once it crosses back below it, it turns into resistance, which is resisting the price. Now, this replaces me manually drawing my trend line. If I was drawing my trend line manually, it would be very close to what you see here. You will get a lot tighter, okay? You'll get a lot more accuracy by pennies by learning how to draw your own trend lines. But to me, it's a factor of what is most important to you. Is speed, is accuracy more important to you? Or is it the few percentage points accuracy you're going to gain by drawing your own trend lines? Okay, so to me, speed and consistency outweighs the accuracy for me. Okay, because we're only talking a small percentage difference between a manually drawn trend line and an objectively or math driven line like this you see. So I like the speed because watch what happens, what we can do. We can now quickly flip through lots of stock symbols and look at where the market is in comparison to the 50. So we could say Ford's an uptrend, Shopify's in a downtrend. I'll get rid of some of my excess drawings here, but you see how we're below the trend line. You see how fast we can now move. We just broke below on AMD to a bearish pattern, right? Lulu is still bullish, but it's retracing to the 50. You see it coming down, but overall it's still uptrend. UMH Properties, right? We just went bearish. We just broke below, right? Lucid Group, bullish. We're on the top half side. So this is where speed comes into play. It would take me probably about 15 minutes to manually draw and keep up with all of these symbols that you all randomly gave me, right? This is not pre-built. I didn't cherry pick and go in and find the best of the best breed of stocks here. I literally pulled it right from the list that you all gave me. Here's Qualcomm, bearish. You see how quickly we can now move along and understand what's happening. This is the speed I'm talking about. So we can run through lists and lists of stocks and know very quickly what is happening. Look at the trend, uptrend, right? Downtrend, Nokia, Tesla, uptrend. Moderna just went and broke the 50-day moving average. So that speed is very efficient, but it doesn't stop there. Okay, this is a one level look into the market. So when it comes back, and I'm going to start back at the top of the list here, the next thing we want to do is start to add levels of confirmations. Okay, so when we think about this trend line moving, and you can go back historically, you can see exactly what that average price was. And you could see how well this trend line acts as support or resistance, depending upon the condition that you're reviewing, right? You're researching. So you want to talk about the COVID side? So if you were back here with us, I was in a live class when we started to sell off back here, when we had the 14-day shutdown, right? 14 days, guys, will settle the curve. Not to get into the political conversation, but that's what they said, 14 days, and some places are still on a level of lockdown, okay? But the application of this is you can see here starting on February 24th, and then the confirmation on the 25th, you see how we broke this trend line and we ran bearish, okay? You can see the dates. And then the recovery started middle of April. And you can see how we broke back above and we ran very bullish for an extended period of time. And overall, you can see we're back here. So when we look at the terms of timing this, okay, so how do we practically apply this information? We're going to add another layer here. when I say the market reacts off these levels, okay, this is what it looks like. You see that bounce? See how the market popped above and then came back down and then bounced off that line? You see it happen again. See how it comes off and bounces and tests. This is called testing the trend line, right? And then you could see when the market flips, how it starts to act as resistance down this line. Okay, so the market likes to do what the market's done before, right? You can see another level of resistance here before it bounced back up. So whenever you see these wicks bounce off these levels, you can see it again here, right? That is it's not just an anomaly. That's not just luck that it happens, because if you have a lot of money following the same look and feel formats, you're going to get similar type of reactions. Okay. The big money moves the market at these levels. It's not you and I, the retail trader. Okay. It's big institutional money. So I'm going to add another layer here. Okay. So I'm going to add in another layer, and I'm just going to do it on a short track. And I'm going to add multiple at once, and I'm going to talk about them. All right. So now what I've done is I've added a second one. Okay. So now we're going to look at correlations between not just a 50, but now I'm going to add a 100-day. Okay. So instead of looking at about 2.5 months worth of trading, we're looking at about 5 months of a price. Okay. These are now aligning your charts and your viewpoints to a lot of big money in the market. Okay. With these simple indicators that I'm giving you now, the settings are what makes it relevant. So now when you look at this orange line here, or yellow line, whatever it is on your screen, that's a 100-day moving average. Okay. So even around here, you can see how the market has bounced off these levels in the past. Okay. And caused a reaction. I like to call this a battle at the moving averages, right? A battle happening at these levels because you have a lot of people watching it. All right. If I take off price for a second here and just look at these lines, what we leverage these for in combination together is a crossover. Okay. So you've probably heard this term before. We crossed above a moving average, or the price crossed above X. Okay. You probably heard that before if you've been in the markets for any more than a few minutes. All right. It's this combination of the cross that gives us those confirmations that a trend has been confirmed with multiple indicators in the same wavelength, on the same page effectively. So you can see how we were bullish on the 50, which is the green. The smaller the time frame, or the smaller length used on the moving average, is going to give you a lot more chop to the trend line. The larger trend line time frames will give you more of a smoother trend. Okay, it'll be less erratic because we're taking in lots more data. Right? We're going to drill in very close here in a moment, but I'm starting with a high level, and then we're going to drill down to be more practical for you and I, who are more than likely swing traders. Most of you in this room are looking to hold positions for days and weeks versus weeks and months. The strategy I'm showing you now with these crosses are more for the investor. I'm going to buy into a portfolio of stocks, and I'm going to hold them for months and months and months on end. That to me is defined as an investor versus the trader who's looking for days and weeks. Average hold time for the Momentum Breakout strategy is about 3 weeks. Okay. This is the investor look, just to teach the concept. So as we start to see these crosses and how the markets work, you can see how this price is continually rising. So simply, when the 50 is above the 100, that means it's a strong uptrend. Okay. When that 50 starts to diverge and get closer to the 100, expect a bounce, or you expect a reversal to happen. Okay. So that's how we leverage these in combination. Just think more confirmations, higher probability. Okay. Now I'm going to add what's known as the beast. The beast is what's used on so many relevant talk shows out there, right? They always talk about how XYZ stock is at the 200-day moving average, right? Or we're getting close to the 200-day average. Tesla, which is one of the examples that you all gave me that's in the watch list, was at the 200-day moving average a few months ago. And I'm going to show that to you because you can see how the market failed to get below the 200-day. It could not hold itself below that level. So why is that important? Well, if you know it's relevant and it acts as such a strong level of support holding price up, then we use that as leverage to get in at that point. So when I see the price get close to that 200, even the 100, I know that historically there's a price bounce up. So that is a clear sign to get in at that point. Okay. So it's all about following the big money and knowing where those big reversal points are. Where are those bounces at? And then be ready for those bounces. Okay. That's how this all works together. So great example here on the NASDAQ, how you can see how this 50 crossed below the 100, held above the 200, and then started that big bullish move, right? You see this? This is that relevancy of understanding how price reacts. Like I said, if you want to go out there and learn to be a master chartist and draw to your heart's delight, by all means, go do it. I enjoy it when I have the time. The problem is I work full time and I've got 2 small children. I've got a house to provide for, right? I don't have all the time in the world to sit and just chart all day. I mean, that's number one. It's not a passion of mine to sit there in front of my computer all day. So I look for cheat codes. This is my cheat code to live my life, enjoy it, and not worry about maintaining dozens and dozens of charts, right? Because you have to constantly maintain them. Now, in effect, I've got in essence, an automated trend to give me direction at all times. Anytime I can pull it up and know exactly what's happening. That to me is more valuable than the art and science of drawing. So easy enough, right? We could split and you could see how these lines react. And now I'm just going up and down the list. This is the Russell 2K. You see how they start to get choppy? This indicates sideways, all right? So we'll talk about that. You're able to see that happening. Whenever you start to see that hook start to occur, you anticipate the retracement, okay? So I don't even have the graphs up here or the bars, and you can get a sense for what's happening. I'll turn them on in a second, but I just want us to understand these lines first. They're Shopify. Very strong AMD, 50 days running very strong, right? Now you're going to learn also here that the charts, the actual bars, the day-by-day bars that appear are more accurate and are faster representations of what's happening. Because these are built on such a large data set, they are lagging. But once again, this is for the investor. So what we're going to do now is change this up a little bit. We're going to drill in a lot closer. Okay, so right now I want you to imagine you're looking out the window in first class, looking down at your destination, right? And you can see cars look like this small on the streets, right? If you can even see them, right? That's what we're looking at now. But what we're going to do is drill in. Okay, so now we're going to approach the runway. Okay, we're coming down and now I can see houses. I can see baseball ballparks. I can see big buildings, right? Imagine we're now landing. So the setup that we use here is a lot closer to the action. So this next template is our trader model. Now we're looking at a 10-day, 20-day, and a 50-day. Okay, so now we're taking a very close look at these changes to the price. Okay, so now we're really drilling down and you're going to see a change. You're going to see a lot more movement. Look at the 10-day, which is the blue line. You see a lot more squiggly lines. Okay, that's really tracking a 10-day average. So it's very close to the point of attack. Then we're looking at a 20. So we're a little bit farther out. And then we have the 50. Okay, so I like to use the 50 here because it matches with a lot of the institutional money. They use that 50. Okay, so I like to have that on the chart so we can see what the bigger players are reviewing. Okay, so we're looking at those bounces. So with that being said, what do you think's happening to the price? Okay, let's talk about Sunoco right now. I'm not going to pull up the candlesticks, but what do you think the pattern looks like? Do you think it's making a rally bullish? Do you think it's a rally bearish? Or do you think it's more choppy? Type it in the question section. Do you think this is more choppy or do you think it's actually moving in a straight line somewhere? Type it in the question section. What do you think it looks like? I mean, look at those lines and how close they are together, right? What do you think it looks like? Yeah, so I got choppy, consolidation, sideways. Yep, choppy, consolidating, another word, right? So let's turn it on. Let's see. See, sometimes we get so lost in the noise, right? With the bars. And with even now, it may look choppy, okay? But you see those lines in between, it's giving you the data that we need. We know it's sideways. Now, the beauty of sideways or choppy or consolidation is that it's typically due to a lack of enthusiasm. Okay. That means there's not a sustained rally or sustained push in a direction. Okay. So this is due to a lack of focus from the investor side. Okay. That means you got people buying and selling almost equally, right? It's not able to have that breakout. Okay. The good news is that historically speaking, stocks tend to trend 70% of the time. Okay. So when you think about a stage, right, think of consolidating or choppy happening about a third of the time. Okay. So 30% of the time to, a third of the time, the market goes into a consolidation. And then the other 70% of the time, it's in an active breakout, meaning it's going bullish or it's going bearish. Now, if you can clearly see the consolidation and get prepared and know when the breakout's going to happen, it sets up for typically a big move. Okay, so Sunico's, it's not a bad scenario. It's not good or bad. It's just understanding what to expect, right? That's what this is all about, is increasing confidence to know what to expect next. Yeah, I love it. Not much happening. Volume is down. Exactly. Consolidation before breakout. That's exactly what you see. Now, I call these triangles. Okay, so triangles are the stage that I consider sideways. And the reason why, because it literally looks like a triangle. People call them flags. They call them pennants, depending upon, who taught you and, what your experience level is. Everyone's a little bit different as far as your charting is concerned. Okay, but it's all the same thing. Let's keep going. Let's just go quickly here. You could see now Southwestern Energy. It's not a big breakout, but you can see we're diverging from each other, right? We're seeing a separation occur here, right? So separation is a distance between the lines. Look at NIO running bearish. I've got a lot of analysis on random stocks. I haven't even looked at NIO in a while, but you see my analysis there. You see the separation of those lines also give us an indication of a running trend. So the more they're spread apart, the stronger that trend is. But just like anything, the trend ends. How you know the trend is ending is you start to see them compress. Okay, so you see an expansion, retraction, expand, retract, expand, retract. That's the level of momentum being built up or lost. Okay, so you're going to learn all this fun stuff as you start to really look at Qualcomm. Great example. So you can see the cross happen here on the 14th of September. You see that cross? And you look at how the expansion, see that blue starts to run away from the yellow line. You see that separation, and the yellow is now separating from the red line. Okay, so you see the separation occur. It's a strong move. It's a strong move down. Okay, so and then what's going to happen? Eventually, they'll start to tighten up again. Okay, so it's a great, simple way to know what stage that symbol is in, right? Look at Alibaba. You see how we had a convergence here? We converged, and then it separated again. Okay, so you can anticipate there was a retracement, and then it extended back down, right? You see this? So to me, it makes an easy conversation to pull up any symbol. Look at Amazon. Look at that range, right? Look at this one, Affirm. Look at that separation here. See that? That's momentum. Type in yes if that makes sense. You see this, the separation? Does that make sense? Do you see the value in seeing the separation and then the compression? Type in yes if that's making sense with you. It's really the heartbeat, right? So, imagine that EKG. I still remember when my kids were born, 7 and 8 years ago. And, you always listen to the heartbeat, and they print out the EKG, right, to measure their heartbeat, right? That's the same sense here. Okay. So we're getting a sense for that rhythm of that particular symbol, right? And it could be anything. I mean, you can literally look at this on even Forex charts. Okay. You could see the rhythm here. So now I'm on Forex currency pairs, and you can see what's happening even there, right? So it's not a stock only technique. I don't know where the pound is, but it's not way down there. Okay. You see this, the trend patterns appear. You can even do it on cryptos. What's happening here, right? Let's go to Bitcoin. Where are you at? Right. So you see the big rally, and then you see it get choppy and tight, consolidate, and then you see the crossover. Now you're seeing a separation here. Okay. So it's not a stock only conversation, right? It's not there. Yeah, I like that. So I've got a comment. I have a setting I call dark charts where I only have the 8, 21, and 50 on a black background. Yeah. With the price hidden. Yeah, that's smart. You know, just it removes a lot of noise to really get a sense for what's happening in that particular symbol, right? So to me, it just makes it simple. So like I said, let's go back to actually putting on our price bars, okay, our candlesticks. So with that simple explanation, right, you could see how we started to see this hook. I call this the snapback. So we were talking about this at the beginning of the month was get ready. How many of my clients remember that? So if you're a client of ours, I know there's a lot of you here. We were already talking about this pullback or this retracement because of how separated those trend lines were. And we started to see the hook happen, started to hit those highs, and we started to fail to get higher, right? That's resistance. Then we anticipated this retracement to happen, all right? So the key to understanding the flow of price is heavily dependent upon understanding that the market just isn't random. It may feel like it at times. So by understanding simple trends and momentum, and I'm going to talk about volume here in a second, to me is really a crucial component is the volume side, but it's very simple to explain. But when it comes into where the market's going to go, a lot of it is where the market's been before. Okay, so the market likes to be comfortable. Price likes to be where price has been before, right? So when you see this drop and you see this close below, right? We talked about this last night in class. Expect a pullback on the Q, right? Because we talked about this retracement here in the middle. And today it blew through the retracement, and now it's almost forming this double bottom here. But it's not random. Watch what happens here when I add on a combination of our indicators here. So what I've done is I've added on here the 100-day, okay? And by adding on the 100-day, you see how we have a benchmark to go after here. You see how we're now really blew through the 50, okay? Now we're on to our next price level, which is the 100-day moving average. Now, this seems bearish right now, okay? I get it. It's a big bearish bar. But I anticipate us to come down here to get us the next momentum move back up again, because it's happened time and time again. The market needs to retrace. It needs to give us new entries. You know, if the market went in a straight line, we wouldn't be able to maximize our trades as much as we want to, because the trend would never end, right? And so we want to be able to see patterns that exist over and over again, so then we can get back in and capitalize on it, okay? So let me give you an example of when this happened recently. So I'm going to pull up the SPY. And here's the SPY. The SPY and the Qs have been running very closely together here for the last several years. They've been hook and step next to each other, right? Hip to hip on these movements. So the SPY, if we go back to last week, a lot of people were frustrated, didn't know what was happening here on Monday's sell-off last week. Okay, it wasn't too far ago. It's the 28th, right? So it's last week. But amazingly enough, what happened is that we came down and tested this 100-day moving average. So on this day, and this is Monday night, all right? So I have a class every Monday at 7. So if you're in one of our signal service programs, every Monday at 7 o'clock, we have a class. And we talked about this bounce, okay? So the rules of this, as I stated earlier, is that when this happens, there's a lot of money paying attention here. It's not just a happenstance that it fell here, okay? And it's not a happenstance that it held here, all right? Because when I look at this bar, it was a very decisive day selling. So down here on the bottom, I haven't talked about it yet, but this is our volume. Okay, now I've got a 20 moving average here, very similar to how we use the moving average here on price, but this one is on the daily volume. So this fuchsia line here is giving us the 20-day average number of shares traded. So on Monday last week, the 20-day average is on the left here, is 166 million shares. That's what we traded on. To the right of that is the rolling average. So a surge of trading volume typically leads to momentum. Okay, that's how price moves fast, is when you get a big price shift and a big surge of money buying or selling a stock or a symbol like the SPY. When that occurs, we want to be aware of that, because that is a potential setup for the next move. Okay, so volume for us. So all we do is look for how high were these columns? Did the columns hit the average or were they below average? Very simple. So column height above this fuchsia line, that means we're above volume. Okay, below, low volume day. So this surge at this price level and this bounce set up for the logical next step is a bullish move to follow, right? And that's what took place. Now, where it went to is not happenstance either, though we may want it to. Okay, so now guess where we're back? We're back down to, here's today's bar, right back down to this 100-day moving average, right? Now, there's a lot happening in the world today. Okay, there's a lot of, the legislative body here in the United States, Go USA, has a lot on their plate this week. So with that, there's a lot of more than likely mixed emotions out there, right? So the confidence factor, just looking at the chart work here, is probably waning, okay? But there's also some levels of optimism out there. I don't want to be, sitting there stuck to the television trying to interpret what these, legislative bodies are trying to do or what the talking heads are saying, right? That's too much, I think, for any normal human being to digest and understand. So what I like to do is look at the data. Okay, the data is the charts and price and volume, all right? And that's what we're looking at. So here with this second test in the last, 8 days or so here, is this level going to hold? Okay, so with this big bearish move today, tomorrow what I'm anticipating is a bounce, because every big move is typically followed by a retracement. If, however, we break below and close consistently below this level, then where do you think we're going to be looking towards? And look how far this is, the 200 beast. Okay, so this is acting as our last line of defense here of a bullish trend. If the 100-day holds, if it holds, then I'd anticipate us to come back up and try to test this previous high, okay? But understanding simple moving averages, knowing, and you don't have to believe me yet, okay? You don't have to believe me right now. I don't expect anybody to do so. But if you start to just follow the money flow and follow the market, as I've shown you so far, you'll start to really see how consistent these bounces become. So with this, we now have a roadmap. We're not left, to our own devices to try to wonder what's going to happen. We've got a clear guide to understand what to anticipate next. I don't have enough time here to divulge, how to set profit targets and all that fun stuff. But trading this is a strategy and a tactic that we teach and deploy of how to manage this type of condition, right? So going back to the NASDAQ, right? Knowing that these two have been running closely, I'd anticipate us to come back and test this 100-day on the Qs. We still have some legs to go down here and test this, right? It looks like the SPY is moving up in front of the NASDAQ right now, right? So, and just think about it, right? There's 500 stocks that make up the S&P 500. There's only 100 in the NASDAQ, so it's not going to be moving as rapidly just based on the size of the index itself, right? But a lot of people pay attention there because it helps set our tone for the trades. So understanding this, I'd anticipate. So once again, expectation, right, is that we're going to get closer down to this 100 and get a bounce off this. A bounce would mean another bullish move, right? Now, knowing that process, we can now layer down and start to really break down all the stocks you gave us, okay? So looking at Ford, I love Ford. I've got a Ford truck in the driveway. It's also very volatile, which I enjoy. It's got cheap options. So it's also fun to trade, right? Ford is running bullish. You can see how we came above this 100-day, right? So see the purple line is our 100-day. You see how the market closed and then bounced, and then we had an open on the 24th, right? Monday. And then you see how that, let me zoom in here. See, we failed to get above it on the 23rd, which was Thursday, right? You see how we closed right below it. And then we had Friday come and we actually got above it. Okay. It may not seem a lot, but that is a big deal. When we close above that, that's the sign to look bullish. Okay. And then of course we had yesterday, and then even today opened up very bullish, right? I mean, if you're trading forward, it opened at 1463. But since then it has retraced pretty much almost to where the high was yesterday, as we said, right? But the market doesn't move in a straight line. I think we all know that by now, right? So with this new move above this 100-day, which we haven't been above it since, August, right? You can see here, and look how the reaction is. I mean, even on Ford, let me just drill in here. Let me know if it's too much on the chart. I can remove some of these just to make it easier, right? Look how this 100-day has consistently held up the market. Look at these multiple bounces here. See these bounces? And then what happens when it goes below, right? It flips the script on us and now starts acting as resistance. Everybody see that flow? And now when it acts above it and moves above, we should now anticipate a bullish move, right? You see how this is acted as support and resistance. So when we start to add the 50, you see we broke above the 50 as well. The 20 broke above the 20. You see this cross up happening. And then we've got a fourth dimension, the 10-day, right? So all we've done is add on multiple dimensions to our viewpoint. Think confirmation. So which one has more weight? The more weight is the larger moving averages. That longer trend line, the bigger the data set, the stronger weight that you need to apply to it, meaning the more relevancy to a trend. The smaller trend lines that we use here give us a closer look, but they have a lot more changes happen, right? They follow closer to the candlesticks than the larger time frames do. Make sense? So we like to use those to get an early sentiment. Just think early warning signal, right? That's what these smaller ones are for. So when you combine all of them together, as I've just done, we're really layering in a lot of key data points to make a decision on. So how do we trade it? Well, trading it is very simple. We look for the crosses to occur, right? So the moment of time is when we get the crossover, right? Entry, exits, stop losses, and profit targets, of course, is a strategy that we deploy on top of this using a forecasting tool that I teach, where we lay out grids of targets to take profit to, right? So the most critical step, like I've said, setting up the trade, setting up your entries and exits are, in my opinion, the simpler part of this strategy. The concept I focus on today was giving you the skill set to quickly identify what's happening, where the breakouts are. We then you see the volume bars, right, as confirmation that there's money flowing into that symbol. So our checklists are extremely simple. So when I get rid of this 100-day, 200-day for a second, this is what we look for at the point of attack. We're looking for the volume to surge at the point of the reversal or the crossover that occurs, right? So what we're looking for here is this cross, and I'll get rid of today for a second, just to show you what it looks like. You see this convergence here that occurred, and then we have the bars above. Below, you can see we've got volume. We've got above average volume. That means there's money entering in and coming behind that stock. That, along with the bullish direction that you can see on the chart, is where we trigger our entries. Okay, so that's how we enter. You could trade the stock outright. Or you follow our options trading checklist and you set up the option trade that mirrors the stock. Meaning, if I'm going to option a stock, right? Options are a derivative of the stock. Then I'm going to use the stock pattern to set my entry, to set my profit targets, and to set my stop loss on the actual option trade, right? So we teach all of that. Okay, so if you never traded options, or maybe just never quite could have the success that you were looking for, selecting the option chain. Also, once you understand what to choose and what and when to choose which chain, once we teach you that, the world opens up to you. That's just as simple as that setting a stock trade. It's just understanding some of the concepts that you look for, some of the makeup of that particular option. Got some questions coming in. Do you suggest using Heikin-Ashi instead of candles? It's all a personal preference. I mean, I don't care if you're using a line chart, you know, to be frank with you. Heikin-Ashis are great. They all have their own unique, you know, value proposition to be used. It's whatever you're comfortable with. Great question. How do you know when to use the 50 moving average and when to use the 100 moving average? It's all about your personal trading. So what you're seeing here on the 10, 20, 50 is more of a swing trader setup. Okay, so this is, we're looking at entries and then exits in about a 3-week window on average. The larger moving average we use is a longer trade setup. So if I'm using the 50, 100, 200, and I'm looking for those crosses, those trades are long-term trades, right? Because of the data that we're looking at. The patterns are on a broader scope. This setting here is what I use for majority of trading done, right? Because it gives us the dimensions of that shorter time period to build our strategy around. That's the short answer there. So day trading works as well with this strategy. So if you come into, let's say, a 1 hour, even a 15-minute, even a 5-minute, you're going to see the same look and feel inside of, I don't really go below a 15, but you could see the 5 minutes and how they react as well. So these moving averages are set to the time frame you're trading, right? Whatever you have selected here. So I can see where these trends break, where that divergence occurs. Okay, I can see the convergence, right? So you can see the majority of times here on the short-term trading, you're going to see the big breaks in the morning and then at the end of the day, right? I mean, volume is also extremely relevant. You see this volume down here, the close and open, and then where's the second session, the close, right? So the majority of your price action occurs in the open and the close. I mean, that's just the nature of the market. But same concept, same focus as far as the trend. So it's extremely flexible, this strategy type, right? So coming back into, that's why I said, I mean, it's really multidimensional. If you can understand this concept, the world opens up because you're not limited to, and I've got some, and just to reiterate, right? There's so many programs out there, so many strategies, so many experts that provide great service, great concepts, great programs. At the end of the day, it's a one-on-one relationship. I mean, it's got to make sense to you individually. You know, for someone like myself to be in a room like this, I have a level of success behind me, or I wouldn't have the confidence to speak this candidly to you. So it works for me. I know it works for our clients that follow this strategy, but it doesn't work for everybody. I mean, that's just the reality of anything out there. So I think it's always important to understand, you know, your objectives, what makes most sense to you. So I got some targets here. The question is, what's the target for Ford? So there's 2 ways I go about picking targets. One of the ways that I use predominantly, it's unfair to show you in, you know, a few minutes. So the simplistic approach to determining targets is identifying previous pivot points in the market. And they're very simple to see when I show you, right? As I've stated, the market likes to go where the market's been before. So understanding that piece of the puzzle, picking targets is very simple. In class, I teach a more dynamic, objective way to do this that leverages the math of trading in a very dynamic way. Remember, you saw some of my grids on some of my charts. That's what it looks like. But these price levels here is where the market has reacted in the past. And the market, once again, likes to go where the market's been before. So here are your 3 targets coming up for forward. With this crossover, these are our profit targets. All I did is took the previous levels, previous highs. And it happens time and time again. You can go back here and see another previous breakout. Where did the market go? See how this breakout occurred? Target, 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 right? You can go back here, do the same thing after these breakouts. Breakout, target hit. Target hit, right? I told you you're going to get simple today. Don't knock simple. Simple is a less anxiety-driven world. Targets. Targets hit up and down the board, right? So using even a simple philosophy like this, you could see how, I hope it looks simple, because that's my goal, is to make this simple for you. Cross, look down, momentum, targets. Okay, we want to see bars above this line at the wait. And sometimes you got to wait for the cross. Sometimes the cross will happen and we don't have volume. So you want to wait for the volume to show up. Once the volume's there, then you know that there's momentum behind the position. Does that make sense, Devondra? You see the targets? Stephen, do we get more success? All right, so we got a question. Do we get more success by waiting for the moving average to be in order to one another as opposed to out of order, such as back in June? So there's 2 philosophies. There's an aggressive way to trade that I teach, and there's a conservative. Okay, so the conservative side is where we want them all stacked bullish, meaning in order. So you have the price, you have the 10-day, you have the 20, you have the 50. That's our conservative entries. That means we're in a trend. The other I won't say advanced, but aggressive way is that we look for the first cross above the 50, right? We see that momentum cross above the 50, because ultimately the 10 and 20 won't be there yet, right? They just won't have enough time because of the lag of the 10-day to get above that 50-day. Okay, so that's just 2 different ways to leverage this strategy. So conservatively, and it all comes down to timing, because if you look back here, just to give you a sense of this, let me get rid of all these drawings here. So if I come back here for a moment and show you this past cross. Okay, so you see this first cross back here. Okay, so now the entry strategy I teach is very simple. It's 1 tick above that bar high. Okay, so high here was 1253. You're going to sit at 1254. So I show you how to set what I call contingent orders. Okay, so we're always setting up at a price level in advance of the market. So none of this is scalping the market, meaning you got to be there in front of your trade. Now you can, but I don't trade that way. So we'll come in and we'll set a stop limit order at 1254. So we sit on top of the high. Okay, we'll teach you that, but just to let you know, we give you the entries, we give you profit targets, we give stop losses. But you sit above the high, and if it doesn't come up the next day, you're not in the trade. All right. So if it retraces, you're not in. You're only in if it actually hits that price above the high. But you can see how this is the first time we crossed. Okay, so this is the aggressive entry. You see how the blue lines and the yellow lines below haven't yet crossed over, and you're seeing the retracement. Even now, you haven't seen it yet. So conservatively, you see how we're deeper into this. The blue line crossed, but we still don't have the yellow yet. So conservatively speaking, we're in a little later, right? But because of the fact that we waited, typically we're going to be in to more sustained trends, right? So you can see as we start to go, it finally goes in our direction, right? So it's all about timing. You know, some of you are going to be more aggressive than others. You know, it's all depending upon your comfort level. To me, it all starts with understanding, you know, what's and how the market works. Then you're going to start to really take this on yourself and just do your tweaks of your time frames and, you know, where you like to be. So the next question is, well, how do you know what to trade, right? So to give you a quick look here, there's thousands of stocks, okay? Thousands and thousands of stocks out there. So what I also teach is how to find and how to set up these screeners so we can zero in on stocks that are in the appropriate setup for us to trade. So for example, today, I'll go to conservative bullish breakouts. So there's only 3 today. Okay, there's Rocket Lab, DSX, and APRE down here, right? There's only 3 that made it today. Okay, yesterday there was 17, I believe, last night. But there's only 3 that matched up with our filters. And so our filters are different ways we look for setup. So this is what I'm telling TradingView to give me a list of stocks that meet this criteria here, which is effectively what I've taught here above, right? So we have all these, we have many different types of filters that we use. And what this does, it allows us to quickly pull up stocks that meet the criteria. You see, now instead of looking at thousands of stocks, I'm looking at 3. And I can see the patterns. The only thing missing is I want to see volume. You see the volume below? These did not meet our volume criteria of being above the average. There's one. So APRE, you see we had 3.3 million shares today. Average has been 2.2. It's a $5 stock. Some people don't trade those. I like them, but everyone's different when it comes to their stock price. Let's take a look at our aggressive one. So aggressive is going to have a lot more. Okay, so I say a lot more. There's 6 today. So it's a bearish day. So we're not going to have a lot of bullish breakouts at a bearish day. So very quickly, we're able to come in and, oh, there's Haynes. So Haynes, it's got, doesn't have the volume, right? So it doesn't have the volume today, 3.3 versus 3.9. So that's not on the board for us to trade. Borg Warner has the volume for the day. All right. So this is an aggressive trade. Why? Because we just broke above. So remember what I just explained. So trading this, the application is what we do is we set up a contingent order. So how many of you want me to show you a trade setup? Yeah, so that's it. So great question. How do you decide the breakout? Is it from volume? It's a combination of everything on the chart, combination of the trend direction and the crossing over of those trends, the change of price against the trend lines. So just think counter trend line, right? Counter trend line break. That's the crossover that we're looking for. Volume is the momentum. So momentum is what creates the price. What we do with the direction and the momentum and the reversal is put it together, right? So it's putting them all together to know the timing of when to get in. That's the essence of this program. So how many of you want to see me set this up in an account? I'll show you how we set up these contingent orders. I'm just going to do the stock side. I'm not going to do the option trade. But how many of you want, if you want me to see it, type in a yes or say, do it. And I'll show you how we set up contingent orders. Because what we're going to do is set up a trade for tomorrow, right? We're going to do it actually tonight for tomorrow. That's how I like to trade. I like to set these up in advance. I don't have to worry about being in front of my computer tomorrow morning because if we enter, odds are it's going to be right at the open. Anybody want me to see it? All right, we got a couple people, actually a lot of people. All right, so let me show you how this works. So I'm going to get the targets on here real quick. So we're going to enter this one tick above this high. And then we're going to take this depending on the profit. So we're going to go, I'm going to lay these out so I can see what the profit opportunity is. So we're just going to do a stock trade. 4%, 9%. All right. So we're actually going to do 2 profit targets. And then we're going to have our stop loss. We're going to have it below our 20-day moving average. All right. So it's going to be about 43.06. Okay, so it's 1 tick below, 1 tick above. So this is going to be our stop loss. And I'm going to show you how to set it up. It only takes a few seconds to do so. All right, so green, profit, blue, right? So this is what we use to track our trades. Every trade is placed here. I don't show my live account. I don't think it's really relevant to everybody. But this is our tracking account that we use for all of our signals and all of our trades. All right. So this is the symbol BWA. I'm going to have to move this off the other screen. There you go. All right. So I use Thinkorswim, been using it for years. You can use any platform that you want. It's a very simple order type. All right. So here's the ask, here's the bid. So I go to buy custom. So we're going to set up an OCO bracket. Okay. That means I'm going to have everything set up right now. I don't have to worry about coming back in tomorrow and doing a stop loss or doing my profit targets. I don't have to do any of that. Okay. So that's why I like this. We have full video lessons on how to do this. So don't worry about trying to master this now. So we have one green, which is our entry strategy. Then we have one red or two reds, which are going to be our exits. Those are going to be our exits. So we're going to have a stop loss and one profit target. I'll show you how I do that, but we're going to have one profit target and we're going to have the rest to protect our trade. All right. So we had the high today at 45.06. So we want to make sure we get a breakout. So the final confirmation of a breakout is that we break today's high. Okay. That will give us and should give us the continuation of a bullish trend. Okay. That breakout only is represented by the price going up. Okay. So this is our catch-all. So if the market retraces tomorrow and doesn't come up to 45.07, we're not in. If we're not in tomorrow, that means the market retraced, right? It didn't go up and hit our entry. So it's a last line in the sand. So I'm just going to do 50 shares here. I want to try to keep the average trade side the same here for our tracking purposes. So I've got a stop limit order. This is very specific order type. This tells Thinkorswim to only execute this trade at 45.07, not at 45.06, not at 45.01, not at 45.10, only at 45.07. Okay, so that's what this order type is. Now I'm going to set my limit, but I'm only going to take off half. Remember, I have two profit targets. So what I like to do is set two profit targets. The first one, I want to close out half. So if we buy 50 shares and we hit the first target, I'm going to close out only 25 of those shares to lock it in, right? I'm going to lock in the profit. And this is what we teach. So that way I can guarantee at least I break even. Once we hit target one, I'm going to then move the stop loss at that time to our entry, right? So that way I can at least lock in that half of my investment. Okay. Then I'm going to set, I can't do it now, but once we do hit that, then I'll hit my second target to close out the rest of it. Okay. That's how we manage our income, is by locking it in. So now I'm going to set the limit at 47.40. And I'm just looking at my chart where I have it already listed to close out 25. Okay. And then I'm going to set my stop loss at 43.03. So if we're wrong, we're going to limit our loss. Now I'm going to leave this entry only good for tomorrow. So I'm setting everything up to catch momentum created today, tomorrow. If it doesn't hit tomorrow, then I don't want to be in the trade because it didn't meet the criteria. So this is only good for tomorrow. But if we go live, I want to leave the stop loss and the profit target good till closed. So that way, no matter what happens, if I go live tomorrow, I've got a stop loss and I have a profit target. So I'm protected on both sides. So that's why these two are good to close, because I want to leave them open into perpetuity until we're done with the trade. So this is literally setting it all up and forgetting about it because I've got everything set up. So when you click on confirm, it shows you I'm going to buy only at 45.07. I'm going to sell half at the target. And then I'm going to have a stop loss here in case we're wrong. All right. I want to limit my exposure to the trade. So once I do that, I hit send and everything is now waiting, right? So if I come to my working orders, you can see I've got a lot of stop losses. We run a lot of signals. So I've got everything lined up, but you can see our BWA here is working. This is valid all day tomorrow. At any point tomorrow, if this gets hit, this will trigger the trade. I don't have to be in front of my computer. I don't have to do anything. We do the same level of entries on our options trades as well. Same concept, but it's on the option side. You could see the stop loss and profit target are waiting to trigger. So if this goes live tomorrow, it probably will. if it goes live tomorrow, if you want to follow me, follow along with this stock. If it does go tomorrow, then these two will turn to waiting conditionally. Okay. So that means the trade is live and now we've got our stop in place. Okay. That's how our trades work. So that way you have, I like this level of trading setups wise because I don't have to sit there and babysit all day long. I don't have to sit there in front of my computer and smash the entry button. So this is all end of day, right? Market's closed, but you can see how we're able to set up for tomorrow without worrying about being there at the right time. Yeah, exactly. So stop limit would prevent a gap issue. Correct. Yep. So if there's a gap, then it will not get above. Question coming in, BWA has not closed above the 50. So the wick penetration is what the criteria is. So if I show you the aggressive breakout, remember there's two. This is the aggressive one. There was nothing on the conservative that checked the criteria. So if you wanted to trade aggressively, this is what the setup is. Last crosses. So it's not a close. The last price, did it cross above the moving average? And it did today. All right. That's why it showed up in this list of 6. So it's aggressive. Don't trade live if you're not comfortable with this. But that's what the setup is. So now I'm done. I could leave. Trade's done. Everything's set up. Did the analysis right now, and I don't have to worry about it tomorrow. I don't have to sit there and time it. Just give you an example. Like, the majority of signals you could see here. So RIG was a new trade from last night. KMI was also a new trade. You can see when these enter. See this 931, 931. The majority of these signals trigger within the first hour of the day. First hour of the day. So, and they automatically come in, right? I didn't push the button here at 9:30 in the morning. I don't have to push the button. I talk all day long about the market. I'm not here at 9:30, watching 8. It's 8 o'clock. Okay, I'm getting ready. It's 9:29. Uh-oh, I'm ready for the bell to ring. I don't do that. Everything's set up in advance. But if you like the intraday, you can use the same strategy, right? But for me, I just found it's a lot simpler to look at it from a high level, right? And just place it. Did my analysis. Starting off, it's probably going to take you half an hour, maybe 45 minutes to do it yourself, depending upon how many stocks. It's a low number today. I mean, last week, after we hit that 100 moving average on the SPY, there was a lot of these, but there's only 3. There's only 3 today. Some days there's been 30 of these. Watch the bearish side. So I don't short stocks outright. I like to buy puts on the option side, but you can see there's 109 bearish matches on our conservative. So what's conservative? It's the opposite. Everything's upside down. Okay. So now you can have a list of stocks. There's 100 of them. That's a lot. That means very bearish moves today, lots of bearish moves, but you could see everything's flipped. So Verizon's a setup on a short. You can buy the put. Obviously the NASDAQ, let's go to AT&T. UNP, right? See, everything's flipped around. So you could trade it multi-directional, right? There's, obviously we know the Qs already. There's Square, 3M, right? So these are now just opposite. So like I said, I don't short stocks outright. I like to buy puts, but same concept, but inverted. Okay. So, now we're able to see everything from both sides. So does that make sense? Yeah. So great question. So you can only set up 2 of these OCOs at once. So I can't set up 2 targets. So if I get the target hit here, I'll go back in and set up the second target. So I'll go in and adjust the stop loss. So I don't have to mess with it really twice. Once when I come in, like I just did tonight. And then if we hit the target, I'll have a second step to go in and move my stop loss to my entry and then go in and set my second target. Yeah, you can't do, more than 2 exits on the OCO. Good question, though. Great question. But that's a good problem to have. Like here's one today. We hit a profit target on GoGo. So GoGo, you can see here at 1233, we hit a profit target at 1548. We hit this limit. So GoGo's down here somewhere. Where are you at? Right here in the middle. So we have 32% on a stock. You see my 50? That was from August. August 10th was our entry. Go. It's a nice little stock move, isn't it? 32%. So we caught this big old move today on go. So you could see the cross, you could see the entry. That's why I track all this. So enter this on August 10th, okay, at 10:18. This was set up the night before, all right? But August 10th, where's that at? August 10th, right here, okay? So very similar pattern as I've already shown you all. So let's go to the 9th. So on the 9th, you could see we had this break above. So we sat one tick above at 12.29. Okay, see the high 12.29. You could confirm the entry. Entry found. There's our 8:10 entry, right? So it hit our target. Okay, so once we hit the first target, then I'll go back in and set up our second exit on go. But this thing just went like what I like to call bandicoots. And so entry is back here on this bar, and there's our day today, right? So big old move up. We were already in position back here, had the bounce, and then we continued today, and that hit our profit target. But so all of these entries and exits are always generated the night before. For me, that's how I set them up, is all the night before, right? So that's always makes it, to me, easier to manage. For most people have the time to sit there and manage it, right? So I know I've gone over quite a bit here, but I will say this: if you are on top of your game and you can take what I showed you so far, feel free to go use it. Feel free to go out there and do what you want to do with it. If you enjoyed it and you can really see the value of learning more about how this works for you, how you can really customize and leverage more strategies like this one. So everything's built in this program around this concept. And then we have different tactics that we leverage with it to add more confirmations, such as using objective profit targets other than previous price, as I showed you today, an advanced way to generate targets, how to leverage retracements and extensions. So I teach you a different way to leverage. It's not Fibonacci's, it's way better, I promise you that, but a different way to leverage that. At the same time, we also teach the option side. So how to select the option to go along with the stock, pattern identified. And then we also go into how to leverage this concept in the Forex market as well as the crypto market. So you can literally understand the flow of how this applies up and down the line, right? So, but for those that enjoy what you saw, I do appreciate the time. If you want to know how you can join a more thorough program, all leveraging this type of content, then stick with me a few minutes. I'll show you how to do that. But if not, and you're good to go, then I do appreciate you. And you guys are, free to do what you like to do and head out if you like. I always appreciate all the interaction, and it's been my pleasure to work with you. So this is what you're going to go through and learn with us. We have an 8-week program. So this is all an 8-week program. It starts on the 4th. After the 4th, you'll have to wait a couple months until this one ends. So it's probably going to be the beginning of the year. But if there's anything like fourth quarter 2018, you might want to learn this now, especially coming into the fourth quarter, right? But regardless, we're here to help. So these are the topics we're going to talk about in and over that 8-week program. Like I said, we're going to talk about Forex and the crypto market. Now, the program is straightforward. It's going to be live classes every week. Plus, what we do is we provide to you signals along the way. So once a week. So you're going to get training modules, all pre-recorded, that'll go along with the live classes. You'll have our strategy checklist. We'll also give you a simple checklist and education around how to select the right option chain, calls and puts. We're not doing multi-leg options. It's just straight calls, straight puts, how to select the right expiration, the delta, what open interest to look for, spreads, all that fun stuff you're going to learn with us. All the various indicators that we use. You saw a handful of the ones we use today. And then we're also going to give you all that live interaction, live classes. So if you like this, imagine this every single week, holding your hand through this entire strategy process. As I said, we're also going to serve you up signals. So starting next week on Sunday, every Sunday, I'm going to post 1 to 2 trades that match the criteria to then teach upon that upcoming week. So along the way, you could potentially earn while you learn with us. So we'll serve up stocks. Any stock's going to meet the criteria. These aren't just low dollar stocks. These aren't just the high dollar stocks. These are going to be the best ideal stocks that match up. Plus, we'll give you the option trade if you want. Okay, so we're also going to give you some help along the way in the form of signals that we'll send out every Sunday night. And then in our class on Monday, I'll teach you why and how we came up with it. So that way we can earn potentially why we learned the process. At the same time, I know that this is new. This style of trading is new to you, and I want to remove all the risk. So it's an 8-week program, but we're going to give you a 12-week, or excuse me, a 12-week guarantee. So you're going to have a 90-day money-back guarantee around this. So if you don't like the class, if it's not helping you trade, if you're not making money with us, whatever criteria you want to put on it, if you're not satisfied, just send us an email letting us know to support@concordiafinancialexchange.com, and we will give you 100% of your money back. It happens. Life gets in the way. Whatever comes up, just let us know, communicate with us, and there's no strings attached. There's no hoops to jump through. There's nothing to qualify for. It is literally the most straightforward process out there. Momentum and trend. So what you're going to receive is only available, and we have an exclusive enrollment special. Remember, it's Monday. The 4th is when this starts. So open enrollment ends on the 3rd because I've got to have time to get everything set up to send you signals for Sunday night, which is October 3rd, right? So we have less than a week to get you wrapped up. So instead of spending $4,400 today for our first group that sign up, you're going to be able to get involved with a one-time payment of only $1,400. Or if you need help, you're going to pay a little more to get the help, but you can also do a 4-payment installation, $402.50, and a four monthly payment option. All right. So, it's either way, whatever makes most sense for you, financially, do what makes most sense. But if you like this concept, if it made sense to you, if you like my style of teaching, then give us a shot. If you answered no to any of those, then like I said, you're free to go and continue what you're doing. There's nothing wrong with that either. But if you're really looking for a new way to do things, a complete simplistic approach, then join us. And I'd love to have you join us on October 4th, which is Monday, and take you through this journey. And at the end of your 8 weeks, you're going to be amazed at your transformation. Typically in the first couple of weeks, you should start to feel a level of confidence and a lessening of your apprehension and anxiety levels, understanding what to expect. And that's what we teach. So I could have talked for another hour and a half, more than likely, about all the different things you're going to learn. But ultimately, time is valuable, and I don't want to sit here and talk till my voice is lost. So if there's any questions, feel free to dump it in the question section. I'd love to hear from you. It's been a wonderful experience with you, and I'd love to answer a couple more. So I'll take a look if there's any additional questions. The question was, did you see go today? Oh yeah, we were set up with that in August. So we were already in position before the big day. Yeah, so I've got a question. How long do you stay in the trade until it ends? So 2 things are going to happen. We're going to get stopped out. We're going to have a profit target. Like I said, typically the hold time is about 3 weeks. If we're in a trade longer than 3 weeks, that means we're making money. So if we're wrong, we're going to learn fast. If we're wrong, because we can then take that bucket that we saved. So I don't look at it as losing money. Let's say we're in an option and we lose 40% on an option trade. It happens. If we lose 40%, we actually save 60%. Right. So I'd rather keep that 60% and move on to another trade than stay locked in to a losing position. I think too many retail traders don't cut losses enough. You don't let profits run and then you cut losses. And we want to avoid that. So I always set them up. So live classes are 12 o'clock. So lunchtime on Mondays is our live class. If you can't make it, we archive them. I just want you to try to make at least one live class a month, right? So 1 out of 4, make it live so you can get the questions answered. Obviously we have support, but it's better when we're all together. I can show you the charts and really take you by the hand. But if 12 o'clock lunchtime Eastern time is tough for you, we have them all recorded, so you'll be able to access them all. But I always recommend you come live. They're hour long, so hour sessions at lunchtime. Yeah, you'll get the recording, Wilfredo, no worries. Yeah, so as long as you're a member, right, you can come back and join us again, right? So we run every 8 weeks. So I would anticipate once a quarter we'll run this program. So the first, few months of the quarter. So you can always come back and join us. It's not just 8 weeks and you're done and you're left to your own devices. As long as you're a Breakout Trader member, you'll be able to come and join us on all of our classes whenever you'd like. 100%. Yeah, we'll get you out the recording. Yeah, so all you have to do is go to momentumbreakouttrader.com is the website. It's all laid out for you. You've got your 90-day guarantee. You'll receive an email with instructions. All of the course material will be released this weekend in advance of the class. Okay, so you have all the information you need. So if you go to momentumbreakouttrader.com, you'll see the course details. You'll see the class date. You'll see the guarantee, obviously. We take every major credit card, so that's all typical. You got to click your 90-day guarantee. No one can join us without the guarantee, so make sure you click that. And then just select which one makes the most sense for you, right, financially. And then you'll receive a welcome email with your instructions on what to expect next. And that's about it. So it's very straightforward. If you've been to other educators in the past, similar type of format. Obviously, I'm different. The strategy is a little unique on how we put it together. So there's a lot of components that are readily available out there. Indicators, checklist, how to use volume. But if you need some hand holding, we want to see how we put it actually together in a tactical way, then that's what you're going to learn. And like I said, it's cross-market, multi-dimensional, so you're not stuck with one method, right? It's not just one market. You're able to really diversify to whatever markets makes most sense for you. You may start off trading stocks and say, you know what, I like Forex better, or I like cryptos better, or I just want to trade options, or I just want to trade, the SPY only. You can do that too. Lots of people do that, but this is a core foundation of how price moves. And I would have showed you how you can do it on multiple time frames, multiple charts, multiple markets. And there's a lot more to learn. I couldn't show you everything you're going to learn today. It'd be overkill and I think your head would be spinning in circles. I love the question. Do you use any relative strength comparisons? Yes, not in the sense of the indicator. So we use relative strength and we'll teach you that, but we use it in the form of the indicators and how wide and how close they are. So you get the same data set, but without having a million things on your charts. So yes, we use that, but just not the indicator. So we use that relative strength concept. Question of a track record. Great question. This is not a spoon-fed program. The track record does not exist for this program. This is a strategy implementation of the concept of momentum and trend. Because I showed you all of the various ways to use this, it's a multi-dimensional strategy. There's not a one type of stock that we send out. I've got track records from other programs, but this concept is not for the spoon-fed. This is for those that want to learn the market. So it may sound boring, but that's what this is. This is not that type of program where I want you to buy because of our results. I want you to buy this and enroll and learn this so you can have the tools to drive your own performance. That's what this is. We're going to be here to help. Like I said, we're going to spoon feed. We'll give you some trades, but I don't want that to be the reason you're buying is our track record. That's not what I want you to buy. I hope that makes sense, but that's just the reality. So I want to set that tone early so their expectation is set. This is really for those that want to learn this concept I taught today so far. And if it made sense to you, imagine what 8 weeks of this is going to do. Imagine what a lifetime of this type of knowledge, because getting into retracements, getting into, like I said, we called the big retracement on the NASDAQ. It's very simple when I lay it on the charts and show you the tools and you can see it. And that way you're not worried when you see a pullback because you knew that was coming, right? And then we can prepare ourselves mentally for when that happens. So we're not losing sleep at night. We're more empowered and focused in on how to conquer the market and not let the market conquer us. And that's what this is all about. So great question. I love it. Okay, good question. So you're talking about the relative strength versus different indexes? Yes. So you'll be able to see that. And I always stack an order. So you'll see us in our classes put those indexes in order of which one's stronger, which one's weaker. Because then what we do when there's a big list of stocks, we then drill in and we find out stocks in that index. So like the SPY last week, all of the signals and all of the focus we had was on S&P stocks, right? So we leverage all that. Great question. Jim, great question. How many possible trades? So when you get lots of trades, how do you choose which one? So what we do is we have a step down. So when we showed you that list of 68, roughly, they have to have the volume, right? So right away, we're going to eliminate probably 2/3 of those stocks very quickly that aren't going to check our box. And then what we go is we look for where are they crossing over, and then we select, right? So when you see a list of 68, we're able to whittle it down to 1 to 2. Yeah, so that's great question, but we're not trading all of those. There is a systematic way we drill down on that list to select which ones to participate in. Yeah, great question though. But volume's the biggest one. I mean, in a given day, there's only about 20% of the market trades at their volume levels. Only about 20% of the stocks hit their daily average on a given day. Yeah, great question. So that's a big limiting factor to what we trade. Yeah, so on the Forex and crypto side, the Forex side is a little bit more straightforward because it's not a newer market to a lot of people, right? Learning what pips are, learning that obviously the different trading accounts and what you can do with them. That's really where the Forex knowledge is. The crypto side, we've got a full curriculum on, crypto market, especially if you're new to crypto. So we've got already pre-built lessons on, how to open up a wallet, how to exchange and open up your accounts and things like that. So yeah, we walk through all of that, but the majority of the lessons is on how to trade it, right? When to time your entries, when to get out of the market. But there's some basic, content around learning what crypto markets are, how crypto, coins work and all that. But it's all trading based, majority of it, trading the execution side. All right. So at this point, I'm getting a message here that we are coming up to the end and I'm running out of time. So like I said, if you have any questions, feel free. You can email me at Matt, M-A-T-T, at concordiafinancialexchange.com and we'll reach out to you. We do appreciate your time. I know time's one thing in life we can never get back. I've got to run and go coach my son's baseball team. So even time's, running out on me. But I do appreciate everybody. I want to wish you nothing but the best. If I get to work with you, then I'm excited. If I don't, that's fine too. I appreciate your time regardless. So we appreciate your time. Happy trading to you. And let's go capture some profits. Thank you all.